Hi, Bill Hettinger here again. I wanted to continue a little bit with the piece on why accountants have made finance so difficult to understand. This is part two. In the first piece, we talked about the profit and loss statement and established that could be multiple names for the profit and loss statement, which tended to be confusing to people. We called it not only the profit and loss statement, we called it the P&L statement, we called it the income statement, we called it the earnings statement, and at times we called it EBIT, or we called some of the entries on it EBIT. So we see profits, earnings, income all mean the same thing. Let's take a look at this video and delve in a little bit lower into the profit loss statement. Take a look at some of the confusing terminology we find on the individual line items. Typically, in a profit and loss statement, the first statement you see is the amount of money the business generated from selling its goods and services. Naturally, there are two different names for this, two different common names for this line. It's often referred to as revenue, and it's very often referred to as sales as well, and sometimes it's even referred to as sales revenue. In each case, it means the same thing. It's the money that the business earned from selling its goods and services. Revenue, sales revenue. It's all the same thing. Typically, on a profit and loss statement, if you look below revenue, you'll see a line called cost of goods sold, which is, as the name implies, is the cost of producing the goods that was sold, or the cost of buying those goods from the manufacturer. If you manufacture, you have the cost of making those goods. If you're a retailer, you have the cost of buying those goods from the manufacturer. Lots of times you'll see cost of goods sold abbreviated as COGS or COGS. When you see COGS on a financial report or in a financial calculation, they're referring to cost of goods sold. Naturally, it gets a little bit more confusing since service businesses don't make make anything or resell products. They don't really have cost of goods sold. Instead, they have the cost of providing their services. So for service businesses, you typically will see a line that says cost of services or perhaps alternatively COS. One of the interesting things I've noticed about many public financial statements that you can look up on the web about your favorite company, at this point, a lot of times they may only report revenue and actually gross profit, and they sort of leave the cost of goods sold line empty. Not shown, and so you have to subtract the gross profit from the revenue to calculate the cost of goods sold, because they're not showing it to you anymore. A lot of times they'll file it in a 10K, but they won't show it to you in the detailed financial reports they put out to the investors. So we've got three terms that all mean the same thing: cost of goods sold, COGS; cost of services, COS. But in addition to producing direct costs of producing goods and services, businesses also incur expenses with simply operating the business that typically aren't tied to any specific product or services. These naturally are called the operating expenses of the business. You can see operating expenses expressed many different ways on the profit and loss statement. Sometimes you'll see them expressed individually, so you'll see a long list of items on the profit and loss statements. You'll see rent, utilities, telephone, advertising, research and development, the salaries of the corporate staff, such as the company president, the accountants, the receptionist, and various line items like that. Of course, not all businesses separate their operating expenses. Many businesses group them into categories. So sometimes the profit and loss statement will have a line item for something like R&D expenses, research and development expenses, two different terms for the same thing, which might include the salaries of the staff in the research and development department. It might also include the expenses associated with lab space or with prototype development. There also might be a line item for selling expenses. This would include the advertising, this would include some of the marketing expense, and typically might include the staff time that's allocated to that particular element, the salesmen and the various sales support functions. There might also be a line item for general and administrative expenses, which would include the general overhead expenses of the business, such as the rent, the utilities, salaries of the corporate staff, and things like that. Naturally, some businesses don't report it that way. You'll find selling expenses, general and administrative, can often be grouped into a single category called S&GA, which stands for selling, general and administrative expenses. So again, we see three different ways to report operating expenses. Some companies detail the line items, some companies group them into subcategories, some companies group them into rather major subcategories. So what you end up with is some rather confusing information. I'm forever asked for students when we do a presentation on finance and We tend to teach them to put selling expenses and to separate general and administrative expenses because I just think it's a cleaner way to present the information. As soon as they hit a financial statement that shows S&GA, everyone gets all confused. Now let's stop blaming the accountants for a few minutes, and let's talk about a few other people who have had a little bit of terminology nightmare into the financial statements, and that would be the economists. Now, you're probably thinking, what do the economists have to do with financial statements? Well, if you've ever heard the terms fixed and variable costs, you'll know that they come from the world of economics. So typically when you want to analyze your business and conduct a break-even analysis or do some other financial calculations in your business, the financial literature says, well, you need to know your fixed and variable costs. Well, we've done 2.5 videos on this now, and we really haven't defined what fixed and variable costs are. We've talked about cost of goods sold, we've talked about operating expenses, but we really haven't told you what fixed and variable costs are. Now, that's where the complexity comes in again. The accountants are coming at it from sort of the expense side. The economists are kind of coming at it from a conceptual economic side. We wind up with two sets of terminology. If you look at the operating expenses of a typical business, it should be apparent that the business will incur most of its operating expenses, whether it sells a few products or many products. The rent still has to be paid, the lights still have to be turned on, the office staff still has to be paid. The operating expenses of a typical business are essentially the fixed costs of that business. Conversely, things like cost of goods sold will vary greatly depending on the level of sales. If the manufacturer sells more, it must manufacture more. If the retailer sells more, it must buy more from its suppliers. So basically, cost of goods sold are variable costs of the business as they vary with the level of sales. So now what we've done is we've taken what the accountants call cost of goods sold, and it's very much the same thing as what economists call variable costs. We've also taken what the accountants call operating expenses, and these are very much the same thing as the accountants' fixed costs. So, if we go back to the question that opened this video, why is it so difficult to understand finance? We see that a lot of the confusion really comes from the terminology. There are many terms that mean the same thing. They get used interchangeably by the accountants, by the investment professionals, by the educators. We're all in on a secret, but we're not sharing it with everyone else. So what we get is kind of this English, Spanish, French combination of language we're presenting to people, which makes it very, very difficult to understand. So really the first step in understanding finance, in my opinion, is to get a handle on the terminology. Once you've taken this first step, the key concepts become much, much more understandable. Thanks.